Nvidia. This week is all about Nvidia. I want to react to a couple videos here talking about what expectations are for Nvidia and share my expectations for Nvidia. Do I think the stock's about to boom here? Do I think that's going to crash down? What's kind of my opinions and perspective? So want to react to these two Nvidia related videos here at the beginning. Dan Niles talking about Nvidia, and then this one here. This one's from 6 hours ago. This one's from an hour ago. And then I want to react to a couple videos from Friday afternoon. This one, 3 buys and a bail. Nvidia, Amazon, Goldman Sachs. Looking forward to reacting to that one. And then I want to react to this one. Tom Lee, I didn't even get to see this till right now. Tom Lee went on CNBC, I guess, late Friday afternoon. And so I want to go ahead and react to that one. But yeah, all eyes are on Nvidia this week. And the reason being is in less than 48 hours from now, their earnings come out. And so I'm an Nvidia shareholder. I'll let you know kind of my opinion on what I see happening with this stock. Hope you guys enjoy this video. All I ask in return, takes less than 5 seconds. Hit that like button on this video and make sure you're subscribed here to the channel. That's all I need from you guys. And also, I will be live streaming Nvidia's earnings. They actually come out with earnings the same day as Elf Cosmetics, as well as Snowflake. So if you want to join me for that, I'll put my Twitch channel as the pinned comment down there today in case you guys want to join me for the Nvidia. That's going to be a crazy live stream, man. That's going to be wild. All right, you guys, let's get into this.
Preview. Paul Meeks, Harvest Portfolio Management Co-CIO. Already.
Happy week.
Paul, we have seen, I don't think they're really traders, but we've seen some profit taking from certain people with NVIDIA. It's up so much. Do you expect this to be blowout like it's been in recent quarters and the stock to trade higher? Since it's come back, but it has stalled for the last couple of months.
That's a good point, Joe. I would say that the markers out there for $5.57 EPS, 24.57 billion in revenues. I expect them to easily beat those figures. What I'm specifically looking for is at least $26 billion in revenues. And I think if they do not beat the numbers by that much of a magnitude, I actually think some investors will be disappointed. So everybody knows that the near-term fundamentals are absolutely stellar. But the big question is, how long is the runway? What happens if everybody and their brother finishes building these large language models?
Okay, a couple things here. Okay, first off, if Nvidia beats numbers, but it's not by enough to make everybody excited, that's likely a buying the dip opportunity, like a huge buying the dip opportunity for investors out there in any sort of situation. Stock crashes down to $800, $700 because, they only beat their revenue estimate by $500 million, something like that. Like, at the end of the day, this is still a massive growth company trading at a forward P of probably 40. Probably, actually, in reality, it's less than 40 right now. And for that reason, it would be a huge buy. Next point he's about to make here, let me hear him out, and then I'll likely attack this. This is going to be easy for me here.
Does NVIDIA continue to grow at these rates with this kind of profitability and cash flow? So, of course, what the company has to do on the conference call is give us what we need, a nice big beat for this quarter, good guidance for the next, and really make us feel at least.
So one of his points he just made there was around everybody, what if everybody buys all their chips? It is, it's a fundamental misunderstanding in NVIDIA. You can't not stop buying these chips. Like, all the big tech companies are doing it. They've got to keep doing it. They're going to have to get the new Blackwell chips, and then the new chips after that, and the new chips after that. Like you can't just be like, oh, and I've explained this many times in NVIDIA videos. This is people really don't understand this story and what's actually going on with the fundamentals of the company. You can't, if you're Meta, you can't just say, oh, you know what, we're going to skip the new generation of NVIDIA chips, even though they're far better, far faster, because, we're going to just save a few $1 billion instead of spending that with NVIDIA. No, no, because then you fall behind Google. Google can't do that, right? And this company over there can't do it, and ChatGPT can't do it, right? OpenAI can't do it, and Microsoft can't do it. They've all got to keep spending because they're all in a battle with each other to win these massive next 5, 10, 15-year opportunities that these companies have. And part of doing that is spending aggressively on these NVIDIA chips. And so, there's no way out of that. There's no way out of that, and people got to understand that.
Broader perspective that there is a long runway here, that its competitors, which have been announcing competing products left and right, are further behind than people think. Even when these competitors ship their chips, they won't take as much market share from Nvidia as folks think, and that Nvidia will continue to have as dominant a market share in AI inference as they've had in AI large language model building. So we'll see. It's definitely going to be a thriller on Wednesday afternoon.
Does inferencing have to eventually replace the build out part? And will there always be upgrades? Will there always be another cycle of even better things, or will there come a point where you do start to see?
I have the answer to that. Will there always be an upgrade cycle of better things? I can tell you the truth. Yes. Yes. Do you think Nvidia is spending all this money on R&D not to come out with another better chip next year, and another better chip the next year, and then another better chip the next year? Like, yes, of course. Like, this is just a silly question at this point in time. Like, look at all the innovation that has happened and transpired in Nvidia over the last 10, 20 years. You think they're just going to like, oh, we're good now. Like, let's cut our R&D budget. We don't need to spend on... No, like, give me a break. That's the bread and butter of this company.
Growth slowing, even if it's not competitors, just in terms of what people need.
Well, that's the absolute key, Joe. So this year the company's going to double its EPS. Next year the street has 30% growth rate. But, 30% is wonderful, but it is a slowdown from what they'll do this year. Yeah, the key thing is Nvidia absolutely dominates and probably will continue to dominate the chips for the build-out, the early build-out, large language model building. The next step in the AI technology chain is inference. Now, inference does not require as strong a computing power, as much computing power. So there, do they see their market share fade a little bit? It could happen. And Joe, it's an excellent question that you ask, and that's what I'm watching very carefully. Nvidia has great execution. We'll see what happens. It's not what happens really with their competitors, is how long is this runway?
But the competitors are focusing on the next step, or still trying to make inroads in the large language model build out? Or are they focusing?
I can answer that as well. NVIDIA's competitors are trying to get to where NVIDIA's at right now. NVIDIA is working on stuff 2 years, 3 years, 4 years from now. The competitors are trying to get to where NVIDIA is currently as far as what they have in the market.
The inferencing part. And is that when the real competition hits, or does it ever hit?
I think that the real competition hits in inferencing, but they're all chasing large language model building, because one of the things that we learned, Joe, from this most recent round of quarterly reports is that the tech majors who are already spending a ton on this have just ratcheted their capital expenditures up even more.
Yep.
Right? Yep. Amazon's going to spend $60 billion.
Yep.
Meta and Google and Microsoft are going to spend at least $40 billion each. And Zuckerberg said on his conference call that is the new normal, and that in future years they don't peak at $40 billion. They go higher in the next couple. And so the key will be, can folks like AMD catch up in the large language model building? Because it will go for some time. And what are they going to do in inference? Even NVIDIA has announced another round of chips recently, the Blackwell chip. So we'll see. Right now they have a nice lead, but of course everybody's coming at them hard.
So that's the silliest thing. The absolute silliest thing in the world in regards to this NVIDIA thing is everybody thinking like this is just like a 1 year phenomenon and that's it. Like no, like every one of these big tech companies is telling you we're going to spend even more aggressively throughout this year and in future years, right? They're talking about upping spend over the coming years for all these big tech companies, right? So whatever they're spending likely with, let's say, NVIDIA this year, the numbers are going to likely be even bigger next year. Now, you compound that across a multitude of these massive companies, and you get a bigger and bigger number, which is how NVIDIA gets even bigger growth rates and even bigger growth rates, right? And then you tack on software revenue that should really start to ramp up next year. I mean, gosh, come on, man. So that's why, in NVIDIA, the truth is, in regards to NVIDIA for the last 20 years, every dip in the stock's been a buy. And honestly, as of right now, it still remains that way. If the stock dips at all on these earnings, it ends up just being a buy. For anybody that's got a long-term perspective in here, jeez.
Bring ground from that April pullback. But the biggest test, of course, might come Wednesday when Nvidia reports Q1 results. Stock bouncing off a slew of price target increases today. Here to give us his read on the tech trade is Niles Investment Management founder and portfolio manager Dan Niles. Dan, great to have you. Interesting, provocative thoughts about Nvidia on X this morning. You do think huge beat and raise, but maybe the pricing adjustment is more muted?
Yeah, I think you've got two things obviously balancing out. The stock's up over 90% year to date, obviously up over 500% since the end of 2022. And everybody on the planet knows there's a huge beat and raise coming. And so I think that's the negative in the sense that expectations are sky high. The positive is, believe it or not, the stock is trading 15% below its 5-year average on a PE basis. And so that's why my thoughts are you get a slight move up in the stock when they report, because it is actually historically cheap on a price to earnings basis.
The other thing you point out...
So I'll disagree with Dan Niles here. He says that everybody knows there's going to be a big beat in raise coming. I don't agree with that. I don't even know if there's a huge beat in raise coming. Do I expect them to beat? Yeah. Do I expect them to maybe raise numbers a little bit? Yeah. But do I expect some monumental beat in raise? Not really. I'm not expecting that. So I would actually disagree with him in respect to that. So, and the good news for Nvidia, it's not trading at a forward P of 100, so it doesn't really need to beat massively, right?
Term is you wouldn't be surprised to see multiple drawdowns of 25, 35% over the coming years. What does that say about its tenure as sort of the king of this market?
Well, I think if you go back, one of the things I try to focus on is, do we have an analogy for this period of AI infrastructure build? And of course we do. It's called the internet build out that happened in the mid 90s. And if you go back and you look at the king of the internet build out, if you want, Cisco, which became the most valuable company in the world in 2000 for a period of time, that stock had multiple drawdowns of 25 to 35%. It was down 26% in late 95, down 38% in 97, and down 34% in 1998. The stock went up 4,000%, though, from the end of 94 till its ultimate peak in 2000. And so with Nvidia, you should expect to see the same kind of thing, because I think anybody who's really familiar with semiconductors completely realizes there's been double and triple ordering this whole time. And so the question becomes, when do you go through a period of a digestion before you start the next buildup? And because you've seen lead times come down from a year, which means you order a chip today, you can only get it a year from now. That's now gone down to 3 months. At a certain point, and I think this...
So, such a bad... and I've heard so many people do this. This isn't just Dan Niles. So many people have tried to compare Nvidia recently to Cisco back in the tech bubble, right? And the internet build out. Oh my gosh, don't even get me started. These business models aren't even remotely similar. The R&D budgets, everything that's going on here is not even remotely similar. Not even remotely similar. Cisco was not a semiconductor company that made stronger, more powerful chips that all the biggest tech companies had to buy more and more of. There wasn't even super powerful tech companies back in those days, right? Like nowadays, the most powerful companies in the world are all these tech companies. Back in the tech bubble days, like the most powerful companies in the world were not tech companies. Those are just ones with high valuations at that point in time, right? Nowadays, the actual most powerful companies in the world are these tech companies with these insane budgets to spend on these chips year after year after year. And Nvidia just keeps coming out with better ones and better ones and better ones. And you could choose to not buy the next generation of the better chips from Nvidia, but you will be left behind. So you are forced to keep buying those chips, right? So it's a really bad comp, in my opinion, to be comping them against Cisco back in the tech bubble.
Happens after their latest generation chip called Blackwell comes out. Once customers get that chip, then they can go ahead and figure out, okay, we double and triple ordered, how much do we need? I think that digestion phase comes in the early part of next year before we start the next build again, because we're still really early in the AI build. It's only been, a little over a year since we heard about this thing called ChatGPT and OpenAI.
And then what? You think the party comes to an end for Nvidia stock?
No, I think the stock I think the revenues will go up 3 to 4x from current levels over the next 3 to 4 years. And I think the stock goes with it because, you go back and you look at Cisco and the internet build out. A lot of the companies that were driving that were unprofitable companies that were raising debt to be able to fund that build out.
Yes.
You look at today for the AI build out, well, who's really driving that? It's the most profitable companies on the planet. It's Microsoft, it's Google, it's Meta, and they're driving this. So the odds of this continuing to proliferate over the next 3-4 years is high. I'm just saying that with the lead times having come in, don't think that this is a straight stair step up because it wasn't for the internet either.
Yeah, very well said. In NVIDIA stock, everybody's got to understand, in regards to NVIDIA stock, this is very, very important. Listen, this stock goes through some bad crashes, right? Do I think it's set up for a bad crash right now? No. A few years from now? Maybe, right? And those bad crashes are 50% type drawdowns, right? They're vicious. And then NVIDIA pulls a rabbit out of the hat and next growth cycle starts. And then I've seen it's gone through several of these just in my investing lifetime where the stock would just get absolutely obliterated and then come back to life and then go through a nice bull cycle and then crash down again. So, that's the story of NVIDIA. But at the end of the day, like I said, with NVIDIA, every dip's always a buy in the stock. It's been like that for 20 years. I don't see that changing anytime soon. 3 buys in a bail: NVIDIA, Amazon, Goldman Sachs.
Higher, and where should you cash out? We're trading the market leaders in a special edition of 3 buys and a bail. Our trader today is Victoria Green, G Squared Private Wealth founding partner and CIO, and a CNBC contributor. It's great to see you again, Victoria. Welcome.
Well, thanks so much.
Let's start with Nvidia. Yes, it's up 89% this year. It's the top performer on the NASDAQ 100, third best on the S&P. Reports next week. Is the rally over or not?
I don't think the rally's over. Now, it is important they have good results next week. A lot of it's going to be about the outlook and guidance forward, as it is for most tech stocks. But I think as long as it's solid, as long as their growth trajectory remains intact, they're going to get over the 950 hurdle and they're going to get over 1,000 a share. So for me, this is still a buy. They're by far and away the leader in the clubhouse in the chip industry, and I don't see that going away. I feel like they're almost about to run roll everybody else because they're so far ahead with the chips they're manufacturing. I mean, look at the Oracle XAI deal. That's almost all going to be funded through Nvidia chips, and for me, that's so much growth potential. The stock is not overvalued, and the growth trajectory doesn't look like it's slowing down. To me, it looks like it's going to accelerate for them. So it's still a buy, and I see $1,000 easy for them if they beat next week.
Real quickly, what do you make of some of the big name investors who have been trimming their positions? They've done quite well in it. Stan Druckenmiller, Brad Gerstner, obviously. And the fact that, look, a 38 forward PE is hardly, too frothy. Well, okay, we could say it's frothy. It's not crazy. It's not 100. It's not like Netflix and Tesla used to have. But is that PE still too expensive?
No.
Yeah, and is 38 cheap? No, but is 38 reasonable for a transformative company? Yes, and I think this is still such early innings in the AI trade, and we're going to see so much investment, not just from companies, but also from sovereign nations, from individuals. As we all get into this AI play, we're still early innings on that. This development is going to continue, and the chip demand is only going to continue to grow. And for us, the challengers just aren't there yet. We can talk about China and AMD and other people that are trying to ramp up, but NVIDIA by far and away has made the best chips, continues to make advanced chips, continue to make better chips than their competitors. It's like, do you want to buy a Mercedes Benz, or do you want to buy like a Toyota Camry? You'd rather ride around in a G-Wagon, right? And I feel like NVIDIA is the G-Wagon of the street.
All right. Let's move along to Amazon. That's next on our list here. It's up 21% year to date, third best stock on the Dow. Its ongoing cost-cutting efforts and growing...
Camry's a good car. Don't disrespect the Camry.
Ad revenue with AWS, a major driver for the stock as well. You are sticking with Amazon.
Absolutely. For me, I see 200 easy on the stock, and I see this also as a generational hold. I do not see this as a tradable stock. I think this is one you want to put in a Roth and you hold it, because for me, they continue to develop new growth lines. Look at AWS. A decade ago, that was nothing. They were just an online retailer. Then AWS is now about 17% of revenue. Now ads are growing, and these are both very high margin businesses. We feel like AWS could get to 40% margin within the next couple of years, and I feel, and it might be a bit of an aggressive call, small, but I feel like by 2025, they're going to be a 200 billion a quarter revenue company. And they have other things they can lean into. Look at this. There's word that they may be starting to kind of use their logistics for outside their sales revenue. So maybe they start competing with FedEx and UPS. They already ship 80% of their volume. They're extremely good at shipping product. What if they expand into even more revenue streams than they have now? And that just further enhances their growth. So for me, Amazon's one of these companies I absolutely love. Do not love the ad on Prime, though. Like, I'd like some way to override that a little bit easier, please.
So, what stocks come to mind? Just off the top of my head, like what stocks come to mind that are generational holds, right? That are just holds for maybe even decades to go in the future. Like one of the first ones that comes to my mind is Amazon, between AWS and obviously the e-commerce platform, like, and their advertising business. Like that's literally one of the first that comes to my mind, and I think about just holding that one for decades, right? Meta comes to mind a bit, although it doesn't come to mind as much as Amazon in regards to kind of like generational, kind of like buying opportunity. Shopify comes to mind. Shopify is absolutely a stock that comes to mind. Palantir comes to mind, definitely. And Nvidia even comes to mind, right? Like, as long as Jensen's leading that company, it's hard not to be bullish there. And I know this stock is one of the most hated stocks in the market right now. But you know what stock I'm about to say. Tesla. Tesla comes to mind, right? Now, obviously, no one likes that stock right now, and that's fine. But that is a stock I think about like the next 10, 20, 30 years. You really want to own that stock. So, and then there's some smaller companies. I think Elf's a good example of a company that's like a smaller company that, is just extraordinary. So, but anyways, those are some of the ones that come to mind whenever I think about like generational type stocks that you want to hold for maybe even decades.
I'll just wonder if they're under more scrutiny at some point for divestitures, so you can't have AWS subsidizing retail, and especially once they become the biggest company in America. Anyway, let's move on to Goldman Sachs. Speaking of crowd favorites, that was the chart we teased. It's actually up 21% this year. It's actually neck and neck with Amazon for that number 3 Dow spot. Pulled back from that retail banking push. They're focusing more on the core businesses. And this one makes it on your list.
Yes, absolutely. I see this, again, the potential to move to 500 a share because Goldman went back to being Goldman. And Goldman is very, very good at being Goldman. Their trading departments, their investment banking, their ultra high net worth focus, and they're continuing to grow other lines outside the retail. Their actual custodial business growing into the RIA, their asset management business continues to grow. But for me, it's just their trading and their deal making is so core to their revenue. And they're very, very good at that. And we see the IPO market heating up. We see M&A heating up. Even with high rates, we are seeing more and more deals getting done. And Goldman, to me, is one of the leaders in that field. And they also then continue to look beyond that. So let's get into the alternatives push that most asset managers are getting into. That's a new revenue stream that Goldman hasn't had a huge chunk of that they can continue to push more into. I see this as early innings in Goldman rally, and I'd buy any dip, and I could see this stock at 500 maybe by the end of the year.
Wow. All right, let's go for...
Ooh, wow, interesting. Alrighty, next one up here. Let's give Mr. Tom Lee's perspective.
Set to dominate and be the theme in the market for the next few days. Could your money be at risk if Nvidia pulls up lame? Let's talk about it with our friend Tom Lee, FundStrat managing partner and head of research, CNBC contributor, and a guy that remained resolute and strong and long even when things were looking shaky a couple of weeks ago.
So you know what's interesting about Nvidia? You got a Dan Niles, right? Dan Niles talking about, everybody knows they're going to, beat and raise, and talking about it's going to be great. But then you still got all these question marks about like, is Nvidia going to miss? What if they miss? Like, what's going to happen to the market? What's going to happen to my money if Nvidia doesn't come through and report great numbers? So there's still, I would say, a lot of worry about Nvidia into these earnings, which I think is very healthy.
Tom, maybe what did you see that others missed?
Well, if we're talking about why markets recovered, to us, the April wobble was really a market overreaction to a string of some inflationary data and then a fear that the Fed was going to turn hawkish and potentially raise rates. I think that is pessimism really pushed to the extreme at a time when I didn't think markets were exhausted, that a top wasn't in place. So to me, it was a healthy pullback. But, it's been important to buy in May. I mean, the market's up 6% since then, and there's still $6 trillion of cash on the sidelines. And investors actually been pulling money out of stocks the last 2 weeks as well.
Did we overstate the importance of just one company, Nvidia?
We did not, because as you sort of set up, Nvidia is really one of the most important companies today because they are supplying a key piece of what is powering all of this innovation in AI. I mean, everything else is really tagging along with actually the value creation because of NVIDIA chips. So it's an important company and an important week.
NVIDIA on what?
So I mentioned this guy to you guys. I mentioned this. When did I mention this to you guys? I don't know, maybe a few days ago or maybe a week or two ago. But Nvidia. Nvidia's the most important stock in the market still for 2024, right? It was the most important stock last year. It was the most important stock this year. But there's going to be a changing of the guard next year. Most important stock in the market next year is actually going to be a stock that used to be the most important stock in the market, and that is Apple. Apple is going to actually become the most important stock in the market because they're going to be coming out with bigger iPhones. There should be growth in iPhone units again, and I think everybody's going to be looking for Apple for leadership. By that time, everybody knows NVIDIA, like the growth rates are going to slow, obviously, quite a bit next year for NVIDIA. So NVIDIA won't be talked about as much. It's still going to obviously be talked about. It's still going to be a very important stock, but I think the talk and debate around NVIDIA will be much less because it'll just be like solid growth numbers. At that point in time, the parabolic, insane growth days will then be gone for NVIDIA at that particular moment, right? And then Apple, everybody's going to be looking at that as such a massive market cap and like, wow, what if iPhone units get back to growth? And then what type of growth rates are we talking about? Could we be looking at Apple from a perspective of, are they going to beat earnings? If they are going to beat, how much? Versus the last, I would say, year or two, we've kind of been looking at Apple thinking, are they going to miss? Or are they going to just come in and meet numbers? That's kind of been the thought process there. So, we'll have a changing of, what's the most important stock again. Like I said, for a long time, it was Apple.
If they come in a little weak, the stock's been weak, so it seems like the market is ratcheting down some of the expectations. So give us the scenarios, Tom, if NVIDIA meets or, misses or meets or has a giant beat. What do you think is the implication for the macro market?
Well, it's going to obviously be a disappointment and a negative shock if NVIDIA misses expectations. And, they are very lofty expectations. I would think investors are going to be nervous, but ultimately it would be I think a prelude to a market broadening because investors who own a lot of NVIDIA might want to look for other stocks that are starting to show promise. If NVIDIA beats expectations, because I'm assuming you're going to ask me that, I think it's going to pull money off the sidelines. And I think, again, it probably helps propel a broadening of this market rally. I mean, I think there have been other groups starting to participate, like energy materials this week.
Yeah.
But it would be better to see a beat than a miss.
Yeah, I feel like energy, you look at stocks like a Vistra, I'm not asking you to go into individual names, but a lot of these energy-related stocks have soared because of AI, because they know that the demand for power, literally...
It would be interesting to see, imagine NVIDIA, let's say they missed numbers, but then they destroyed guidance or something like that, right? How would the market take that? That would be really intriguing. If they missed revenue, but then their guidance was way stronger than expectations, because let's say like shipments or deliveries was off or something like that, that would be really, really intriguing. But alrighty guys, appreciate you joining me. That wraps up today's video here on the Reaction channel. Thanks so much for joining me as always. Down there today, I'll put my new workshop for you guys. It's a free workshop if you want to access that as pinned comment, and then also my Twitch channel, because in 48 hours from now, I will be going live for those NVIDIA earnings along with Elf and Snowflake on there. Much love and have a great day.